Sun came down, I had the radio on. I was driving, trees went by, me and Dale were singing, little runaway, I was flying. Never would come to me, felt so good, like anything was possible. It was control of my eyes. Last weekend, the rain was unstoppable. It was almost good. Such the sky grew dark. I put the pen down. Spent some time waiting down this road. I'm picking up whatever is mine.
Good morning, traders. Welcome back to another day of Trading Garage. Good to see everybody in this morning. Hope everybody had a good day yesterday and looking forward to another interesting day today, as once again we're going to look at the timings of the markets with some other interesting aspects along the way. Great to see everybody back. Morning, Drew. Morning, Earl. Tommy, good to see you. Mr. Cole, double Mr. Coles, actually. Scott, welcome back. Pear, great to see you back in. Iman, hope you're doing amazing today. Other folks joining us as we go through our day. I apologize for being tardy today. At 8, too many doodads to play with or mess with. All right, so looking over this morning, let's start off on the crude as usual. Looking at our weekly chart, well, that's a pretty interesting little run. We're going to have the crude report out today, I think. Isn't today the crude report? Hang on. Oh, let's look. I'm pretty sure it's today. Let's pull this bad boy in. So today we have crude inventories coming out at 10:30. I'm already running about 20 minutes behind, but if you're in a position 8:30, we are going to have the CPI month-to-month and core CPI. So those numbers coming out at 8:30. Those are really the only ones that are going to affect us today. We're going to have the oxymoron, which is going to be out today at 2 p.m. That's the federal budget balance. It's an oxymoron. You cannot say federal budget and balance in the same word. Just not doable. CPI is probably going to be awkward. Yeah, I agree. So probably going to watch for some fairly strong volatility in the market here at 8:30, and then we'll see where the thing ends up going. So as for today, crude report is the next big one after this 8:30 event. Yesterday, we talked about crude has now come into a sell cycle. Now, one of the things that's going to be key for crude by coming into this weekly reversal, one of the things that's going to be fairly key for me is by Friday, and today is going to be a catalyst for that. By Friday, I want to see us closing below this blue line. So, in fact, let me do one little thing on my chart here, because my older eyes, blue, is getting harder and harder to see. There we go. I can see that one a little bit better. So we have the open price line on our chart, and all I'm doing is I'm changing the color of my dot to make it something that I can actually see. And because, no, back up, back up, back up. Opacity, line thickness 2. Probably can see that one. That's a little better. Yeah, all right, I can make that one. All right, so the open price line for the current signal is here. Now, we gave it a little bit of room last week because we were within that 3-bar window. So we were looking for the reversal to occur inside of that window. And again, looks like it probably occurred on the last bar of the run. With the volatility coming in this week, we've already seen the market make a move down. Pretty strong move starting off on Monday, 110.38, and we've pulled into 97.98 all at one whack. So to a $13 move to occur in a day, it's pretty strong. Came right back up in the overnight last night. I think the report today is going to be the driving factor. By Friday, here's the key. By Friday, we need to be closing below that price. So we need to be closing below there if this thing's going to take off, which I expect it will, but it has not closed the bar. So a little on the hawkish side. We did push down and hit this weekly support level at 101.61. It's been on the chart for years. So we've been watching that particular price level since all the way back here in 2015. So that's where we're at the moment. So we're going to see how that one continues to play out. That price level of 101.20 was very significant. Again, when we go back several years, we can see there's the range of the market through all the way back into 2012 and 2008, and that was the major market range. So we're doing some very similar things, and the lows from that time, that 101 number, 101.75, I guess it is still come back into play all the way now. So again, we've been here before. So there's that 101 right here, and that's that same price level. The 101.75 is the exact same price level that the market struggled around back in 2009, 2012, 2014. So that number is holding very significant support and resistance for the market. And we can see over the course of time, we've hit that number now 1, 2, 3, 4, 5, 6, 7, 8, 9. Did we go last week? 10. The last 12 consecutive weeks, we have bounced off of that 101.75 number. For the last 12 consecutive weeks, we've hit it. So that number, that particular price point, is extremely powerful for whatever reason it is for this market. So we want to keep a close eye out for this bad boy. I'm going to make that one a slightly different color because it is proving itself now to be so significant. Let's pull it into something that we don't use for anything else. There we go. So we're going to change that one to a super significant number. In fact, I'm also going to make it a little bigger. So when I find a number that does this, that the market reacts to in such a strong way, I like to call that one out a little bit special. So that one's special. 101.75 is the number, and again, if we get up into that price level, look, that one is a tough nut to crack. So we need to see the market closing below 104.63. And ideally, if we would be nice to close below the 101.75. But in either case, we got to close below here if this thing's going to have any legs, and we've got until Friday to do it. So we're sitting above daily support. We're sitting below above weekly support, below weekly resistance. We're kind of in a little quandary area here for the moment. We'll see what happens by the end of the week, but still on the short side for the moment. Looking at, all right, over on the dailies, pattern 5. Now notice the pattern that we drew in the chart yesterday. So yesterday I talked about that this was a pattern 5. A pattern 5 indicated we should see the reversal back down to the dot value. Well, that's pretty much where it came to. So the market shot down. When I drew this on the chart, it hadn't hit the dot value, but it was very close. So the market actually pulled down. We got through the dot price, which is not a surprise. Oftentimes when this occurs, the market will hit the dot, then it will pull back up close to the open price line and then fall away again. So when we have a pattern 5 that acts this way, we're going to watch and see what it does. The main profit target for anything short from back at 111 area has been attained. So we would be in a free position if you're still hanging on to anything there. Make sure you're in a free position. And if the market comes back up, we expect to see significant resistance in the market at 109.75. That's the current open price line for this run. And then we'll see where it goes. So I'm a little bit bullish until on this chart until the econ comes out, and then we'll see where it goes. If the market pulls up in the 106.16, then let's sell it. So a little bit bullish just for the day, and then I expect tomorrow I will be bearish again based on this pattern. Okay. Oh, that's pretty significant. All right. Well, yesterday we marked out our daily cycle. And by marking out the controlling bar range for the daily cycle, I said at the end of the day that the market, if we closed below the bottom of my box, then we were likely to finish lower by the end of the week. Well, we closed the bar yesterday at 5 o'clock below the bottom of the box. So by closing below the bottom of that box, fairly high probability that this market continues down into Monday. So we'll keep an eye out for this one. Short. The only thing that would really change my mind is if today, now it could happen, but it would be a really strong move. If today shot all the way up and closed above 110.55, it would have to close all the way up there, which means from the open of the pit session last night, 99, it would have to go all the way up above 110. That would be a $12 single run day. That's pretty solid. It's done it before, but it doesn't do it very often. That's the only thing that would change my mind. Otherwise, this chart is telling us short now until Monday. So short until Monday. The market is back up into resistance, and where anything in this zone is going to be a resistance level again until Monday, because yesterday did close below. Ching. On to the daily, or not the daily, but the hourly. So looking at my 1 hour chart. All right, and I estimated, that was a pretty good estimate actually. I estimated where the range would be. I was off a little bit. So right there, it actually we came out of the zone here. All right, so yeah, that ended up being a swing high. It looked like it was going to be, and then it turned out to be. Nice to be lucky once in a while. So as we're pulling in to this current time frame, we are favoring the longs. We started favoring the longs on the 1 hour chart. The trend reversal was expected to occur at 6 o'clock last night, and that's just about right on time. I'm gonna need more of that today. So the trend reversal coming in right there, we did see the push up. And as we've seen this move right back up again, no long signals since the trend reversed. So since the trend projection said go up, we haven't had anything to give us permission to get an actual entry. So there hasn't been hardly anything of that nature. Coming into 11 o'clock today, if the market gives us a pullback down on the 1 hour chart, and if we were to get a pullback into that big pink level, that 101.75, remember that's that weekly support. If the market pulled down into that weekly support as of 11 o'clock, we could get a little bit of a push up. As it is currently, we're back up and retesting the average price of the last 120 hours right now. And we'll see what happens. If we pull down to 11, again, 11 o'clock today, will give us an opportunity to buy it back up into 3. So let's see what happens. Nothing else really to report here until then. Looking at the 30, I'm experimenting with a new indicator here, so bear with me. And looking at the 30-minute, drawing the box out, we have an inverted power zone. And over on the 30, the expectation was 10:30 yesterday morning, 11:30. We were expected to see the push back up. The market did close 2 bars below the bottom. By closing 2 bars below the bottom, there was the push right back up again. So, or that was the expectation. When it closed 2 bars, we knew then we were going to be down for the remainder of the day, or the remainder of the zone, actually, not just the day. This zone is going to be in place until, lo and behold, Friday. So the 30-minute says short until Friday morning. That's pretty interesting. The big reversal coming in the overnight was a pattern 4, so no surprise there. Ping, ping. So there we pulled into a very solid pattern 4. If you're new to the room, if you're new to the patterns, pattern 4s, pattern 5s will normally constrain the highs and the lows of the markets. Just a matter of figuring out which time frame it's reacting to. But on this particular case, we pulled into a pattern 4. The pattern 4 correlated very closely at 8 o'clock last night to the beginning of the buy zone on the 1 hour. So the 1 hour said it's time for the trend to go back up for the next 2 days. The 30-minute said, yeah, it is a pattern 4, so we do have confluence, but it is very counter trend and counterintuitive on the 30. So we'll see who wins this battle. These guys are not going to be in agreement for the next day or so. So the 30 and the 60, not in agreement at the moment. There's our econ. Let's see what the econ continues to do, rolling down to the 15. And all right, there's all my scribble from yesterday. So on our 15-minute, nothing for me to change here. It's still in play. So on the 15, we started off with a buying power zone and a pattern 5. Fairly clean pattern 5, power zone 445 yesterday morning. On the 15, we saw the move down really hard, small pullback up, tested the open price line during our time yesterday at 10 o'clock, and there's a continuation even lower. As of this morning, we have now pulled all the way to the top of that power zone again. Lowest risk shorting area on the entire chart. The closer we get to the top of that box, the lower the risk in any kind of a short. And the market has pulled up, tested the top, has not closed above, therefore it is still short. So everything is still yelling short here over on the 15. Going to be favoring shorts for the next, however long this thing is, a day at least. So all the way today and tomorrow and then some. So the 15-minute is still looking to be underlying trend down. Even with the overnight pullback, again, still looking for the move to the downside. At 9 o'clock this morning, we are going to come into a buy time. I got nothing. So it's going to be counter to my projected trend. The projected trend is the red box, and that's what I'm going by. 9:45, we'll get our next opportunity for a short. So if the market gives a small pull down, up 9:45, down for the next hour, and at 10:45, And this almost is signal congestion as these are so close together. So signals are very, very tight right now on the 15. That's not going to be super happy. 10:45 is going to be right after the econ. The open of that bar will be the crude report today. So we'll see how that one reacts. I don't really have anything else for the moment. No pattern 4s or 5s setting up here. So we'll just go with that. Down to your entry level chart on the 3. Well, the 3 minute, not really in agreement with some of the other time frames. And until 10:36 this morning, the 3 minute is on the buy side. It is an inverted zone. So we came into this zone at 345. Off of 345 this morning, it was a selling time. So it came into a selling zone. The market only closing 2 bars below the open price line, then shot all the way up. Once it did, the market closed 2 bars here above the top of the power zone. By doing so, it inverted. Inverted is a very simple term with complicated meanings. Oxymoron there. Inverted just simply means that the market is now projected to do the opposite of what it originally was. The rule that we use here in the room is once we draw the power zones out, if the market closes 2 bars above the top of the power zone, that's the rule. If we close 2 bars above the top that are not part of a pattern 5. Okay, if it's part of a pattern 5, we will give it 1 extra bar. That's it. But if it closes 2 bars above, then the duration of the time, the market is going to go in that direction. And that means this thing's going to be long until 10:36. So we've been up ever since. The market has given us a low risk buy area at 536. Not really, no, we had a pattern 5 there, so we had nothing to do there. We would have also had a buying opportunity at 709. Nothing at 721. Geez, look at how tight the signals are together, man. It's a ton of signals today. Geez Louise. We would have had a buying opportunity here that did not work out, and another buying opportunity at 815 that did. And so we've had a couple of these things back and forth. 830, highly risky time. We see that single huge down bar, direct representation of the current CPI numbers out, and we'll see where they go from here. As the market continues to pull down, our swing low right now is here. So right there, it's the current swing low in the market. And the top of the power zone is also support. That means if the market on this 839 bar were to pull down and slap this level, if we were to come down and hit 102.57, my expectation is we would peg it here, come right back up into a pattern 4 at support. So this would be a pattern 4 automatically. If it even hits 102.57, it's a pattern 4. And if it hits that pattern 4, again, that's at support. So we'll see where it ends up continuing to go. Yeah, so we might get a pattern 4 here. Let me turn a minder on my other screen so I can just kind of keep an eye out for it in case. And if the market hits that price in the next, it actually has 4 minutes and 30 seconds. So if we hit 4 minutes and 30 seconds, I'm going to be a buyer. Let's drop it back down for a minute, see what she's going to do. So the 3 minute has us long, the 60 minute has us long. So the 3 is up, the 60 is up, the 30 and the 15 are both down. This crude's going to be a mixed bag of nuts today. That's all there is to it. This thing's going to be crazy. So we'll see where it ends up going, but it's a lot nicer when you do have like confluence between time frames. And today, not so much. So there's not so much confluence here at the moment between time frames. 53 seconds to close this bar. Again, it has to hit those dashed lines right here before it's going to be qualified as a pattern 4. And the very next dot up is a buy signal coming in just a minute. So we'll see what it's going to do. 32 seconds. She's getting close. I wonder. All right, we have now tapped the previous swing low. We do have range expansion coming down into this time frame in 8 seconds. Looking for a buy opportunity. I got the buy opportunity, And let's see if the market is going to give us a push back up. We're now into a buy cycle. Whoa, check that bad boy out. All right, we have the bar we're on right now. I did not give it a whole lot of risk. The bar we're on right now is another buy time. So the first one taken out, took a little bit of a whack there. Holy crap. I got 8 ticks of slippage off that move. That was kind of harsh. That was not a pretty sight to get started for the day, for sure. Dang it, son. 8 ticks of slippage. Okay. Well, that was kind of interesting. No, thank you very much. All right. Still looking for a buying opportunity. Pattern 4. I'm going to wait here for about another minute and a half, see if I get one more shot at this thing. And right there would be the next super happy level if we're able to get down into there. So if the market pulled there, there's our weekly support level. I'm still looking for the buys as long as we're at or in this green box. We'll see what it does. But yeah, hang on. Man, 8 ticks of slippage is a lot. Yeah, that was painful right there. Hitting the chop zone open price line right now from 102.15. Weekly support back in the market at 101.79. Dailies are all short, 1 hour, and the entry level chart on the 3-minute are long. So again, kind of a mixed bag today. 1 minute to go in this bar. This is a pattern 4. If I get the fill here, then I will give it until the bar closes. 55 seconds to get into the move. Looks like it's going to give me a second opportunity at it. Oh, don't you do that. I front run it by 2 ticks, and it looks like it stopped 2 ticks short of me. Don't do it, pig. Come on, pig. Oh, no. "20 seconds. Oh. Weekly support holding. Come on. 13 seconds. That sucks. That really sucked. Oh. The dumb thing hit 2 ticks from my perfect entry and shot straight back up and did not give me another shot at it. This is a pattern 4. Now we get to see if the current bar closes above 102.33. You aggravating. Look at that crap. You aggravating piece of junk. Oh. It would have been a $400 move off the bounce. Come on. If it's a P4, it should move back up pretty quickly. Come on. All right, pre-market move. I'm already behind the 8 ball a little bit, guys, just because, well, I got 8 ticks of slippage on that last run, and that hurt. So, yeah. A very painful move with an 8 tick. Just ridiculous. So, for that reason, I'm at least going to get back to even. So based on my last 2 moves, and that just pissed me off there because it missed my perfect entry by 2 pips. Like, really? So I basically I just went to even on the trade. Literally, I went to even on it just to make sure I got my cash back from the first debacle of slipping 8. And I'm flat. I'm flat both ways. I'm out $9 in commissions, but I'm flat both ways. Piece of trash market. Come on. That was frustrating right there. Well, all right, I'm gonna move on. I'll come back to it. That's just not a great way to start the day. 8 ticks of slippage. Now I'll be whining about that all day. All right. Well, let's see where we're at here on the Russell. So the Russell, the projection was, as of yesterday, we expected to see the market start to push up. On the daily, we have obviously pulled down into here, and we should have seen the move starting to grind its way higher. Well, that's not exactly what we saw. As the market did come down into the day yesterday, it tested weekly support. This is actually not weekly, it's daily. I don't have a weekly chart for the Russell. As we came into daily support at 1729, we saw the market tapped, it came back up, and we closed the day out literally on the open price line. So the open price line of that current signal, we didn't get above it. We literally closed a doji candle on it. That's not a great sign. If today closes below 1760, then in all probability, this market is going to tank. So it will go all the way down until May the 23rd. So it's got some, and there's room for it to go down. In fact, I only have, wow. Yeah. That's the last support level I drew. Interesting. All right, well, hang on here for a second. Let's get another one down here. What do you think? The next level below me, that one has been, this level was never tested. So the next level below me is there, and the next one below that one that was never tested was here. So we have 2 daily levels below us, and that'll get us by for a while. Let me explain what and why I'm choosing these particular price points. Whenever we're using the time signals, and especially over on a daily, the daily time signals, the market likes to return and retest its open price lines. So it likes to come back and re-hit open price lines. Well, we had an open price line here at 11.12 or 11.2, and the open price line was the close of the bar right there at 1546.30, and the market has never retested that level. So from this price forward here, we have never come back and hit that level again. It hit it, ran away, never came back. So that level is likely to be validated again or come back to. The same thing for the level below it. We came down into the buy time. Here on this daily, we saw the shot up. This price level was never retested on the last pullback. So it also is an untested level. So when I get these untested levels like that, I will mark those, and those are the price levels that I use for my daily support and or resistance. The current price that we have here, I got to adjust it ever so slightly, same thing. So here we had a sell signal, doesn't matter, sell signal, the market shot up off the sell, never came back and retested that price line, which means the market will come back most likely at some point, and those are the prices that it will seek out as it's coming back down. And below where we are now, everything else in here has been retested at some point. That one's been tested. That one's been tested. Yeah, so the rest of these have been whacked. The next one down that never has been tested, probably gonna have another one down here somewhere. That one got retested on a rebound. That one got tested on the bounce back. So yeah, so that's kind of the last grouping, if you would, that I have of lines going back. This chart doesn't go that far. How far back does this chart go? Yeah, well, it goes back as far as it can. So going all the way back into 20. Well, this instrument's only been around for a few years, so that's why it acts weird like that. So going back for the time that we do have to play with, that's the last one that I've got is right there. We go below that, and the world's going to be in really upset territory. So the RTY has only been in effect for about 5 or 6 years. It was the TF before that. So that's one of the reasons I don't have a weekly chart here. There's just not enough data. All right, so we're down. We have support just below us at 1724. The next support level down is 1547. and then we've got one more below that. Below that, we're going to have to do something different. So using our time cycles, looking for those untested support lines. Again, we hit this one now that we've got it adjusted correctly yesterday, almost to the penny. So there's the tap. So that price, again, that came from all the way back over here. That price has now been validated. It has been tested once again. And we will see this over and over and over again. So now that it's been hit, if the market doesn't respond the way we expect, which is a bounce back up pretty strongly, it did it yesterday intraday. But if it doesn't continue back up, and if it goes below 1724, the likelihood is pretty strong that we're going to see a pullback into 1545, $200 move down. Somebody's going to be getting upset when that happens. So we'll see how it ends up going. As of right this moment, until we close anything below 1725, I'm still bullish. I think we're getting an intra-market pull down here, but if we go below that level, we're done. I'm not going to give it any more after that. The sucker's likely to tank. And if it hits there, it will tank. It'll fall like a hammer in water. All right, using our daily cycle analysis. Geez, it's almost inconclusive. So yesterday, we drew out our controlling bar range, which is going to be in effect for a week. And yesterday, we were looking to see if this market closed at 5 o'clock above or below the range. If it closed inside the range, well, then we had to wait a day. Well, dang, I mean, it closed on the range. So that's so close that I'm going to say I can't really call it. I guess if we measured it down to micrometer, it probably is below, but it is so close, it's very difficult to call. We'll see. I'm going to say it's probably going to be short. Usually when I second guess them that way, they just keep on going. But I'm going to say we're probably going to be on the short side. 1760, in all probability, we're going to move down now until next Monday. And with this being the case, watching for the short again until Monday. Now, as we watch for the short until Monday, anything pulling back up and retesting the bottom or the top of this range become resistance for the market. The only thing that would change my mind on the direction until Monday would be if today's bar alone were to pull all the way back up and close above 1821. So it's doable, but it's not likely, but it is doable. Let's watch and see what today's bar does. Again, yesterday, that's so close, it's crazy. But I guess by the micrometer, it did kind of close below. So keeping consistent in our analysis, it says we should go down. All right, the hourly. There's our hourly range from yesterday, still in place. We pulled into a pattern 4, small pullback up for a couple of days there on the pattern 4 on Friday, and we've seen the continuation down. Yesterday, we did put in another pattern 4 at 2 o'clock in the afternoon. That gave us the pullback we have now. As of 5 o'clock this morning, we were on the sell side again until 10 o'clock. The 1 hour chart here has our projected trend to be to the downside until 4 o'clock on Monday. So the projected trend on the hourly is down. So right now it looks like everything on the higher time frame analysis is down, down, down. Pull this one in. Yeah. All right. So until 11 o'clock this morning, our 15-minute is also down. Don't have a clue where the bottom is going to be, but 11 o'clock this morning until 4:45 tomorrow morning, we are going to be looking for buys. So until 11 o'clock, there's nothing on this chart to tell me anything other than down, except for, oh, look at that. Well, isn't that special? Okay, so we pulled into 730. Let's take a look at this. We have counterintuitive patterns on the chart on the 15. This is likely to affect our entry level, so we need to know what it's doing. We had a pattern 5 that came into place here at 5:30. The market pulled back to the dot price as expected. So it pulled right back down into the dot price. This would have been a pattern 5 in the expected direction of the trend, which was down. Projected direction still down. As of 7:30 into 7:45, the market put in a brand new high. So technically, actually, it did it twice. Both of these bars were brand new highs. The first one was not. So we put in a brand new high that is inside of our 3-bar window right there. So again, we look for the pivot to occur within 1 bar of the time cycle. Once we came into our 3-bar window, there's the reversal. Target was attained off of this one right there. Target 1, target 2 is the next sell dot, which is obviously way down here already. Now, this is a pattern 5. Because this is a P5, let's just put a 5 up there. There's a pattern 5. 5s follow 4s and 4s follow 5s. So this is a pattern 5. The signal after it is automatically now going to be a pattern 4. That's here. So we're coming into a sell signal. The sell signal, the market at the selling time is already below the previous swing low. So this is a brand new low in the market. We had a previous low here. We had a previous low here. Swing indicator identified both of those. The trend is still to the downside. So as we're pulling into 9:15, we have a range expansion bar. This is a single bar that is larger than any bar around it, and it's closing in the direction of the sell dot. So that's a trigger. That's a trigger opportunity for a lower risk buy by seeing that candle. Then we're automatically a pattern 4 because we are within 1 bar of the sell time. So time-wise, we're right on time. We're within 1. By being within 1 bar, it tells us that by the close of the candle at 9:15, there's a fairly high probability that this market will pull back up to the dot price. Now, we don't know what the dot price is going to be until the bar closes. So we'll just continue to watch it. The further and harder it falls, the bigger the chance that the market is going to pull back at 9:15. So we're pulling from a 5 to a 4. The 4 has range expansion. This is a counter trend, counterintuitive move. So if you don't trade counter trend, well, great. You're going to look at this and completely ignore it. If you do trade counter trend, this is going to be an opportunity to get a potentially low risk buy. And we'll have to see how the candle closes at the 9:15 bar. So 9:15 into 9:30, it could be either one of those 2 bars, 9:15 or 9:30, because again, we have a 3-bar window. So we're automatically a pattern 4, potential for a pullback here. And it may not look like a lot on a 15-minute chart, even if it pulled back up into 1760. On a 15-minute chart, that's not a big deal. On the 5-minute chart, it would look like a huge move because of scale. So keep a close eye out for that one. Oh, there you go. Hey, Colin. Good morning, brother. So let's keep a close eye out for this one, guys. Again, pattern 4 does not be caught off guard by that pullback. At the, pull this crazy box in. Okay. Till 10:40. All right, our 5-minute chart. Geez Louise, look how big that thing is. Yeah, it was API numbers come out, Colin, here in the US. So I can hear that dumb train coming. Gee, he's still a mile away too. Oh, his horn kills me. All right. So there's the move down into the bicycle counter trend. We have a projected trend to be down until 10:40. After 10:40, the trend is projecting to be back up for a while. Bear with me, please, when the horn guy comes by. I hate this guy. So the trend for our morning is going to be projected to be back up for a period of time there. Back down here until 1:35. And then down again. Actually, no, up again. He wasn't so bad today. It's a different train. The last one, the new train they've got, dude, that horn is insanity. All right, so there are trend projected moves. We'll see what I don't have a clue what the prices are going to be, so we'll just put them out there just so we can kind of keep up with them so that you guys can follow along with my thought processes. All right, so right there, we're in a sell trend until 1040, which obviously the market has been making the move down pretty strongly here. So time of day for the market to be selling off, and we're going to have a 935 as our next sell opportunity. Only thing I would have to do at 935, the market would have to give a strong pullback up into 935 and then a move down to 950. If 935 is a brand new low, that's going to be right after the open. So if 935 were to pull down and hit a brand new low, it would be a pattern 4. And if it were a pattern 4, let's see what the price does between now and 935. If it is a pattern 4, it will correlate to the 930 pattern 4 on the 15-minute. So if this market puts in a brand new low at 930 to 945, we will have correlations for stop run pattern 4 action at the open. So that means if we put in a brand new low between now and the open and at the open, then watch for the wick and we'll look for a push right back up again off the open. So let's see what the price does between now and then. We don't know what it's going to be here at 930, but that would be the prettiest setup for the chart. So we'll see how it ends up playing out. Nothing to do until then. No other signals until 9:35. Cha-ching. All right. My little crude long, I gave it 2 shots. The first one slipped me 8 ticks. The second one, I got in it and I basically got all my money back and got out so I could focus on it. It did end up giving more profit on the other side. And it missed my actual entry, Colin. If you weren't here when I did that, it was sad. I had a buy order sitting at 78 and the market missed me by what, 4 cents? Aggravating thing. So yeah. If I'd have got that one, I'd have just held it and we'd have just quit for the day because it's going to go straight back up. Still long on the crude, still favoring the longs on the crude, looking for opportunity to get long again. We just had a rev poll. I wasn't here for it, but we had a reverse polarity move at 857, and off of the rev poll, there's the bounce and the shot right back up. I did front run it. You aggravating. Not front running, it would have been at 75. I was at 78. I may not have front run it enough, but I was front running it. This might be a 3-cup of coffee day today. All right, let's see where we're going to go today. Yeah, I know. Normally I front run by 50 ticks. That's hilarious. Yeah, that's about right. Some days that was the case yesterday for sure. I was like, what the crap? All right. Our weekly chart on the ES. Check that out. So the weekly chart on the ES, we're still going down. I've got buy options hanging out way over here. So looking at July the 1st for picking up some other opportunities. So I'm very happy with this chart. I'm not happy because of the global economy, but I'm very happy for my own personal finances because, yes, sir, looking for the sucker to move on down into July, and we're going to see what it does through there. Spot on time-wise, weekly chart, yay. That market's going to continue to crash. We have weekly support at 39.32. Now, let's be aware also, we are coming into the 120-day or the 120-week. This is a 120-week average price. It is currently 39.27. So 120-week average price, 39.27. We have only been below this average price 3 times since 2008, 2009. So since the market started to make the move up, yeah, that was 2011. We went below it for just a couple of days in 2016. We went below it for 4 weeks in 2020. So there's only been 4 times since 2008 that we've been below the 120-week average price. So that's going to be a pretty significant little support level for this market based on history. And again, it's not going to be a surprise to me if we get below it, but we'll see where it ends up going. I'm just looking for the next turn when the market probably going to continue down until July the 1st. So till then, forget about it. Short, 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 short. Support coming back in, 39.31. Looking at the daily. All right, talked about yesterday, the potentials, and I still kind of like this. This line never stays where it's supposed to when you put it up front like that. But still looking for the potential of a major reversal there, somewhere around the 715. Yeah, probably gonna be more like here. We'll see. But I'm looking for the continuation short-minded. Well, not like that kind of short-minded, but you know, favoring shorts until at least Friday. So off the last sell time, we had the pattern 4 target attained off the retracement, and then a continuation down. This one is short until Friday. So short, short, and short. Looking at, all right, our daily cycle. This is where this analysis type first came from, was this crazy chart. And on our daily cycle, well, yesterday did not close below. So we've seen the close below on the crude, right on the edge on the Russell. Yesterday on the ES, not so much. So the ES actually closed a very small buying day. And basically that just means we have to wait one more day. So we've got to wait one more bar to see if we're going to close today below 39.87. If we close inside this range again today, then in all likelihood, we're going to continue to be choppy until Monday. We'll be in an inside bar until Monday. That's probably what's going to happen if we don't close outside of this range today. Normally, if you close your first 2 bars in the range, it'll just stay in the dumb range until the end of the cycle. So we'll see what it does. If we close today below, we're going to keep going down until Monday. Otherwise, I got nothing else here. On to the 1 hour. Would you look at that? All right, so coming into 12 o'clock yesterday, yeehaw. As of 12 o'clock yesterday, there's where we bought back into the market again at that pattern 4. It was a nice clean move. The thing launched it right back up into the afternoon. That was my scale in price for the P4, and it hit and ran. So it got us out of that move coming into the afternoon. And 2 o'clock, solid run over on the ES here. It ended up getting to its profit target. It took it all the way until 8 o'clock this morning, actually, to get back up to the dot price. This one was a with the trend, pattern 4. It did close 1 bar below. Now, this is concerning. We have another pattern 4 coming into the market right now. So the market is back down again, double bottom, a solid double bottom in the market, easy to see. We have a range expansion bar on a sell signal, and the ES is probably going to run back up here for until at least 11 o'clock. So the ES is going to be on the buy side of this thing until 11 o'clock. Yeah, let's see where it goes. So ES pattern 4 on a 1 hour chart. Bam, and watch for the immediate pull right back up. Maximum risk is going to have to be at 39.46. This is a double bottom, pattern 4. It needs to get back up into 39.67. That's kind of it till 11 o'clock. Grab a little box from yesterday, pull it over. We'll get these two. Okay, as of 5 o'clock yesterday afternoon, we did come into a buy cycle here on the 15. There was our range. The market made the move up until 6:30 this morning. Ching, right there it was. So until 6:30 this morning, we were favoring longs. As we came into 6:30 this morning, we started favoring shorts. Cha-ching. And, oh, that was clean. This one's only going to be in effect until here. So only good for until 9:30. But that's a pretty solid pattern 5. So let's see where we're at. You don't get much prettier than that. So the market, we had a projected trend to be down. So the trend move as of 6:30 was projected to be to the downside this morning. As we came into this 6:30 projected move, the market made a small move up. Sideways, 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 right on time at the exact swing high. We have another one of these pattern fives. Pattern 5 in the direction of the projected trend. Whoops, that's not what I wanted to do. Would you please cooperate with me? Okay, so we had a pattern 5 on our 15-minute at the high of day. Very first candle making the pullback here, we would have had a short entry opportunity at 40.46 3/4, the risk being 40.51. So about 6 points of risk here on a 15-minute chart. $300 is not really bad for a 15. And the initial profit target would have been out of the market right here. Secondary target would be the upcoming signal, which it's still hanging on. So the pattern 5 driving the market right back down as expected into 930. As we are coming in at 930 this morning, let's pull this back. 930. We're looking for a buy until 10:15. Wow, and then everything gets kind of, that's a very technical trading term for those of you who are newer. The word, it's just, it takes years to master and to understand. And it's a really technical term. It's very difficult to properly articulate the meaning, but I think everybody gets it. So yeah, so we're going to see what we get. We're going to come into some sideways action this morning after 9:30. 9:30, 3 bars up, and 10:15, 3 bars back down to 11 o'clock. And the longer duration trend move is expected to begin today at 11. Interesting. 11 o'clock and 11:15 are going to have full correlation. So just as we're getting to the end of our morning, we are going to have a correlated move there, a trend move at 11, and then an actual entry opportunity at 11:15 up until at least 1:15. So we don't really get a long duration move this morning. We do get it in the early afternoon. So the S&P here on the 15-minute says we should be starting to look for something major to happen late morning. So that would be in agreement with the 1 hour. So the 1 hour and the 15, basically both are going to be looking for longs most of the day. Looking at down to our 5. Oh, all right, let's grab some of these things over here. What does the 5-minute tell us today? Entry level chart over on the 5. Right now, oh, why this thing won't scale right. Equidistant spacing. Thought I turned that back on yesterday, but maybe not. Oh, it looks better already. All right, so 8:35 this morning, we were in a sell zone. Junk. Market made the punch. Pattern 4. On the last bar of the pattern 4, we had a single bar pullback, not very much, and then a continuation down. So this thing is definitely still on the short side of things. Let's go ahead and change this around. It's kind of a weird look. Here, swing low was there. It's going to be up facing until here. Make it red. Actually, I'll need both, aren't I? All right, let it change the color, which will take it a half an hour. Oh, that was kind of quick. Nice. All right, so this one gives an indication until 9:40. We expect to be favoring shorts off of, and that began all the way back there. So, well, why that thing's not projecting forward? It's obviously still quirky. Let's just see if I can reload it if it fixes it. Yeah, it fixed it. Okay. Middle note. So coming in off of 940, wow, the range is gigantic. Swing high to swing low, it's bodacious. For those of you who don't know what the word bodacious means, it's big. It's a really fancy word for big. All right, so the current range is here, and we're going to come into another selling trend for 955 projected down until 1040. Again, I don't know what the actual price structure is going to be, so we'll have to adjust these up and down quite a bit. And then over on our hour or our minute chart, it's pretty interesting that most of the ES, while the dailies and weeklies are saying down, down, the ES minute bars are not. They're actually saying as we get into the later part of our morning, we should be expecting to see a trend move back up. So time-wise, the trend is projected to go back up. Really, with the exception of one small area, the trend's looking to be back up until here most of the day. So we have a really small area here where it's looking to be down in the afternoon, but the remainder of our afternoon is actually long. And that bad boy is long for a while. So, yeah, a wow. Oof. No, wrong. I'm wrong. Till 8 o'clock, till 6 o'clock. All right, so there's our afternoon. Kind of crazy. So we'll see how this thing continues to play out. And that's our projected trend directions for the day. So as of right now, we are coming into a pattern 9. This is 3 consecutive higher high buying candles into a buying time. And I actually could get a short here. I actually could get me a little short action off of this one. Risk just above the top. All the risk I'm going to give it. And let's see if she'll pull back and give us a little bit of momentum to the downside. This is a pattern 9. So this is where we have 3 consecutive higher high candles, 3 consecutive higher high buying candles into a buying time. And my trend is projected to be down right here. So with those, I'm already up $100 in the move. I don't have the best fill in the world, so probably not going to make much off of this, but I'm not going to lose anything on it. So my perfect fill, I got here kind of late. My perfect fill would have been 39.72. The market started to fall quickly. I'm in at 71.25, so I don't have a lot of, I didn't get a good fill at all. I kind of jumped the gun. I wasn't quite in time, but I wanted to get a little piece of this move down. Yeah, I'm going to get $62 for my trouble, and if it'll keep going, great. Otherwise, I'll get my $62, and at least I put something on the table. Again, I got here late, and I should have been filled short at 39.72.25 and not filled short at 39.70. So it's $100 difference. So I got something off the table there once I realized that I was in kind of over my head. We'll see how it continues to go. But this is 3 consecutive. So if you follow along with the pattern videos, 1, 2, 3 consecutive buying bars into a buying time ends up being a move down. So that's what we expect to see happen, at least for a short term. And this was a Rev Poll rule number 1. So Rev Poll rule number 1 is a buying candle at the buying time. Buying candle at buying time, we expect to see an immediate reversal back in the market. So yeah, huge move down already. So we'll see what it's going to continue to do. I scalped a little something off of that one, obviously. The last long that I had on crude still going. Now I can actually focus on it again. Let's change these back to equidistant bars because they just look funky otherwise. Why do you want to do that? Come on, why are they all stacked up? Yeah. All right. So we have an idea of where these markets are likely to go. Let's see what we're going to end up getting out of them today. I've already had 3 trades, so I'm already in the hole, $12. Well, not in the hole, but I'm down $12 because I got that last crude 8 ticks of slippage. I cannot seem to let that go. 8 ticks, that's a lot of slippage. So, yeah. And then we saw the second one miss my entry by 4 ticks. So, deep breath, more coffee. We'll see where these crazy markets are going to take us here. Let's see what we can get today. Still favoring the short right this moment over on the EAS. The open price from yesterday is $39.90 and a quarter. So we are getting back up close to that price. I'm not going to have anything else here until this 940 signal on the ES. The entry level chart is not going to give me anything. Got a little pull up action. Probably not a big surprise after the econ drove this thing to the, hammered it to the bottom. Let's see what our number came back out as. Today is the, whatever today's date is. Today is the 11th. Yesterday we had a pretty fair day. All right, so the numbers, Earl, were not as bad as I thought they would be. So core CPI came in at 0.6, was expected to be at 0.4. So that's actually a little better than expected. And 0.3 instead of 0.2, considering that last month was 1.2. Yeah, that's actually a little bit better. Still not great, but not horrible either. Your wife brought you a cup of coffee, Drew? Dude. Really? Tell her I said hello. She probably misses me. She hadn't seen me in a while. So, all right. 10 minutes, ladies and gentlemen. 10 minutes till we come into the open. And let's see what else we're going to get off of this crazy thing today. Hey, Iman. Yes, sir. Yeah, when you have PVT signals that line up with warp signals, they're amazing. I'm having a personal issue with it. I really am. Because I've gone so long now. I've gone, what, at least 8 or 9 years. Yeah, at least. I've gone so many years with nothing on my charts but time signals and things that are based just time signals, that I'm having a difficult time, although I helped build it. I mean, it's not that it's an irrelevant tool. I'm having a difficult time with a personal implementation of using my PVT. So basically, I suck as a trader because I'm really having a hard time incorporating the two together. It's for me, it is like kind of like learning a new language. And I have to admit, as much as I love looking at it on the charts, if I'm honest, it causes me a certain amount of angst because I guess I'm anticipating it. I don't really have a really good way to articulate what I feel with it. It's a great tool. I think on an auto strat, it would be a phenomenal tool. For me, using it as an individual, I'm struggling because I'm so accustomed to using just time, and now having to incorporate, or not having to, but now looking for ways to incorporate the price back in. I've played with some different things. You know, I had a couple of range charts that I was running consecutively with the 3 charts that I have here. And, you know, I've had some little things along the way that I've tried to incorporate. And I just haven't found anything yet that I really like that I can focus well on. I'm sure I'll get it, but I'll keep messing with it for sure. All right, we have 4 minutes till the open at 9:35. All right, there's that pattern 4 that we had earlier. So remember, on the Russell, there's that 15-minute pattern 4. Looks like the market started to make the pullback on the very first bar of the pattern 4. So a pullback up here, not a surprise. We knew it was coming. So there's the pattern 4. Targets attained off that pattern 4, and not a good clean entry one. So I recognize it as an analysis, but it's just not a good clean entry. You would have had to have had a fade in off the first bar and then prepared to fade in on the second bar again. So it did work, but not the cleanest thing in the world to get a low risk entry on. So we're not going to get that 4 off the open, it looks like, for sure. Over on the crude, still favoring the long. So crude, we're long on the 3 and long on the 60, short on the 15 and short on the 30. So long on the 15, long on the 60, short on 15 and 30. Crude's a mixed bag of nuts today. Report will be out at 10:30, so that's probably going to be the driving factor of it. 9:45 this morning. As of 9:45, I drew our arrows here earlier. If we got to pull up into here, again, 9:45, we may have an opportunity for a short. Now, if we close 2 bars, above the top of that range, let's look back, see where we're at. We haven't done anything yet. We close 2 bars above the top of this range before 9:45. Well, actually, that would be the bar we're on now, and then one more. We actually might still get this short. 9:45 may very well give us a short right there. And we did not pull down, so we were looking potentially for a pull down, and the crude is launched here off that 3-minute chart. So check it out. Let's not get too, again, we got to keep up with what things are happening. And over on the crude, notice that we've just put in a pattern 5. So 11 o'clock signal didn't change. The only thing that's changed was the price doing the bar right before. So this bar has 30 minutes to close it out, 31. It's automatically a pattern 5. That means as of the 11 o'clock signal, this is going to incorporate our econ, and off the economic event right there, 11 o'clock is automatically a P5, which probably is going to give us a strong reversal back down again. Interesting. So we've got a little bit of a mixed bag. The 15 and the 30 are short. The 3 and the 60 are projected long, and the 60-minute is putting in a pattern 5. So don't want to get hung up in that mess. All right, and we are open. Tell you what, if I can get a move up and if I can close, I need to close a buying candle here, reversal time in the market 9:35, and I need to close a buying candle. We did not test the low. We've not pulled up high enough to call it a high. And on the 9:35 bar, I'm going to be looking to sell the Russell. So I'm going to slap a little order up here, see what kind of volatility we get off the word go. If I get a buying bar at 9:35, it's got 4 minutes. But if the bar ends up a white bar or a buying candle, then I'm going to look to sell that sucker right there. Well, doesn't look like I'm gonna get a buying candle. That means I'm gonna wait for a minute over on the Russell. So it's dropping pretty much off the open of the bar. It's okay. I'll wait. Mm-hmm. Hey, Doug, good job. Doug got a piece of that RTY short. He was down on his 1 minute chart, got him in early. Nice. Oh, yeah, the 1 minute had a pattern 5 up there on mine. Oh, yeah, there you go. Yep, the 1 minute you did good. Right at the average price, too. Yeah, right at the average price. Nice move, Doug. It was a good setup. Just didn't quite form out the way I wanted to see it. Good job. Love that. You got a few minutes left in it, too. Now, I tell you what, Doug, check it out. You already got some good profit up in this move. Now, if this thing, remember, we're always looking to see what things are and what they become. 3-bar window. If the market touches the previous swing low inside of this 3-bar window, that's here, it becomes a pattern 4. Okay, so you're already up good cash. But if we hit here on this bar within the next 3 minutes, if it hits that price, which is basically the double bottom in the next 3 minutes, make sure you don't lose anything. So it may punch it and shoot straight on through it at the same time. Because it's a pattern 4, I would definitely make sure I got plenty of profit out of my trade when I got to there. That makes sense, brother? Because it's so close to that previous low. I had a sell over on the crude. I kind of ignored it because it was counter to my trend direction. ES, we are now coming into the buy zone, and I got nothing. So ES, we're going to have a buy signal. We have a buy trend. So we have a projected trend that's expected to push up into 955. So it's only a couple of bars. And we have a sell time. So we have sell entry with a buy trend. Blah. The only thing I'm really interested in doing with the ES at this moment, if the market were to hit an extreme, I don't really care which extreme, but because the two signals are opposed, they're diametrically opposed on their direction, but they are in agreement on the time of day for a major move. So because of that, if we were to hit an extreme low, then I would not hesitate to buy it. If the market were hitting an extreme high, I would not hesitate to sell it. But if we're going to be in the middle, I'm probably just going to do nothing. I'm going to leave it alone. I'm not going to do anything with it. So not a clean setup at all. It has to be at one extreme or the other before I'm going to be happy about doing anything there. So ES is kind of a blah. Not much to see. All right, the Russell, 43 seconds to close the bar. Only got, on this 5-minute chart, we only had 2 bars. The very next bar up is going to be this 9. Actually, we got one more in between there, don't we? We got one more bar, 940 bar, or a 945 bar. So we had 2 bars between the 2 signals. Not much time to do anything else with that one. It looks like my next opportunity up is probably going to be 951. All right, we're getting the penetration here. We hit the dot price, and that gives us an indication we're going to have a trend continuation move up. Let's take a quick peek over on the crude. There, 11 o'clock. Yeah, crude is definitely putting in this 10 o'clock pattern 5. I want to be careful here. I want to take only limit order trades on crude because that pattern 5 on the higher time frame. So I'm not going to take breakout trades on that one. If I can get a pull down from here into 951, I'll look for a buy. 951, we'll see the move up in 1009. See what we get. All right, we have a buy signal and a sell. If the ES hits the swing low, that's a pretty good move down. But if the ES comes down and whacks this price, in the next 4 minutes. So if it hits that price in the next 4 minutes, it's a pattern 4, and we'll look for a push back up. Otherwise, I don't have anything to do here for the next few minutes. Well, guys, gonna be one of them boring days in the market. I got nothing to do for the next few minutes. I just got nothing. So 950, we might get a ref pull. We'll see. I'm gonna freshen my coffee up. I don't have anything else setting up for the moment. I'll be back. Mike, how are you? Oh, okay. I got you. Okay. Okay. Oh no. I apologize. Thanks, Mike. You know, anything I need to drop those just well, I can call you Rick. All right, guys, sorry about that. Took me a little bit longer I expect. Pattern 5. Well, that's kind of clean. Crap. Let's see if I can get a piece of it. If it'll pull back up and give me the fill, I'll take it. I'm not going to chase it, but so far. Pattern 5 over on the Russell. So mark it back up on the 5-minute. See if we're going to get a fill here. Risk is going to have to be 81. So it's going to have about 5 or 6 points of risk. Well, I got the fill. See if it'll give me a run back down. Profit target's going to be the dot. See if we get a little move there. A little adverse excursion. Oh, crude 1-2 bars closing below. Crude is a rev pole. So the last move we had on the crude just now, we had a reverse polarity move on rev pole rule 1. So not super clean. So obviously didn't get the move there. Got about a minute and a half. Come on, Russell, make your move. 1 minute left to close this bar. 3 points in the move. Coming into a sell signal right behind it. And yeah, let's see what this thing's going to do. Yeah. I'll tell you what, looking over at the crude here, again, we've got a reverse polarity signal. All right, that actually is not a bad move over on the Russell. We did not end up with reverse polarity. This is a pattern 5 continuation move because the bar shot up above the open price line, but it hasn't closed yet. Let's see where it closes. I've got some time in it till 10:35. So let's see if this thing will push on down nice and strong. That'd be sweet. Got nothing on the ES. Trend reversal at 9:55, but I had no entry signals until 10:25. So the ES, I don't have any signals there. Come on, Russell. If the Russell pulls up, and if it pulls against me, because we're coming into the sell cycle right now, it is a 5. And if it pulls up and hits the previous or the current power zone open price line, I'll sell it again because it's a pattern 2. I don't know that we're going to get that far. The bottom of the power zone is holding significant resistance for it. But if it should spike up and whack that price, I think I'll sell it again right there. All right. Well, I'm up $200, so I'm not going to take a loss being up $200 in the move. I'd like to get a little something out of this thing, but it's trying to go, but let's face it, it's struggling. But being up $200 in the move, 4 points, I'm not going to take a losing trade. I'm up $250 now in the trade. It hasn't given me a lot of movement yet. But I believe I need to get $105, $110 off of it, no matter what. Fine, whatever. I got $100 off. If the current bar closes above 1774.90, then I'm going to sell it again. I would like to see a buying candle here. The pattern 5 is in play and it's sort of working, but it's really not. So we didn't close underneath that open price line. And if the current bar in 53 seconds closes below 1774, technically that ends up being Rev Pol Rule 1 and 2. So as long as we close above 1774, and it would be extra nice if it was a buying candle at this point. So if it were to pull back up and retest and close like 76, then I could sell it again. So still looking for reasons and opportunities to short it. And here we are coming into the last 25 seconds. We might actually get a short here. I might get another short. And again, as long as we're above 1775, it's not a rev pole. Five, 4, 3, 2, 1. All right, it is not reverse polarity. That means the sell signal is in full effect. I sold it again because we had a buying candle. Remember, I said my rule, I want to see a buying candle. Well, I had a buying candle. Now it's got a big wick, but it is a buying candle. And off the buying candle at the selling time in a downtrend projection, let's see if we can get a little bit better movement out of it now. The pattern 5 was never broken, so $300 up in the move. Would you go? Geez Louise, this thing's like pulling teeth to get it finally make its dumb move. Gonna go to a free position. I'm up $300. I'm not giving it all back up. I'm gonna look for a profit target of here. So if it'll get down to there, that'd be great. Probably won't get there. I'm gonna manage it a little aggressively. We are coming into the crude report in 20 minutes, so come on, go. It's like it wants to break. It just isn't quite breaking, is it? Well, you give me $150 this time. So I've got $150 locked in on the move, and I really want it to, you need to break and go, son. What's the matter with you? Go. Piece of trash market. The move is clean. The entry is clean. It's just, man, it's struggling. Go. I can't catch a break on this thing. It's just not going. Now that I'm out, it's going to probably tank. I'll sell it again if it comes back and gives me the same price. Same move all over again. Be the second time. All right, crude's interesting. It's not super interesting, but it's a little bit interesting. All right, so on the crude, that's better. Okay. So, well, I thought we were going to stay below. I thought we were going to get a reverse polarity on the crude. This aggravating thing here is going to be a little tedious for the next few minutes. So, still favoring the longs. We're going to be favoring the longs until 1036 and then some. Currently, no, we're not going to get a ref pull, are we? No. All right, last shot on the Russell. I'm not going to play with it after this. I got a minute to close this candle. We'll see this thing move back down. Come on, go, pig. All right, I'm up $150 again for the third time in this same dumb trade. I'm going to lock in profit again. Come on, break. It kill you to go. All right, now we're getting some action. Jeez Louise. Like pulling teeth on this dumb thing. Finally getting a little movement out of it. Up $500 in the move. Come on. And I think somebody owes me at least $250. So we're up $500. I'm going to get 250 of that off. Been a struggle here a little bit. Actually, you know what? I'm going to be a little aggressive. I'm going to go right there. So I'm going to get $450 locked in on the move. And if we come down into here, I'll just call it good. So let's see if we can get the move. It's going, man, it's struggling to make this move. And I'm out. Can't catch a break. It's just not breaking. Oh well. Tired of nickel and diming this thing. It's just not, it's not the way we normally expect a move to go. Not that it didn't go, it's just really struggling to get on down there. So let's leave it be for a minute. All right, crude econ's out in crude econ's out at 10:30. Crude inventories are coming. Hang in 10. Colin, I just saw your post. That's hilarious. That's absolutely hilarious. Mm-hmm. All right, I haven't had anything on the ES in a while. Doug, I don't know. That's a great question. We were messing with him yesterday, so I honestly don't know. Looks like those are the settings we were playing with yesterday, Doug. 7, 14, 21. The same thing I messed with when we were messing with it yesterday. That's on the 5-minute. I had it on yeah, but that's what I got it set on right this minute. Does that make sense? I haven't adjusted them. Yesterday was the first time I've adjusted them since probably, I don't know, 6 months. Been a while. Look at that dumb move. I know you play with this Russell a lot, Doug, and I like it too, but I mean, look at that crap. Pattern 5, it's still in play. They've not violated the top. So the top of the pattern 5 has not been violated. Right there it is. That would be the maximum risk. We're into a 2, still expecting the market to make it down to here. And it's going off the 2, but it is just not going fast. They are just hanging out here. If you're newer to my room, again, I know there's some of you in here that are fairly new. Today is just it's a boring day. So today there are days where we have something going on all the time, and there are days where, you know what, there just ain't a whole lot happening. Everything is waiting for the crude report. Yeah, that's what I think. I think everything's waiting on that number. And we've got 12 minutes to wait. We're back up to the open price line again. I'd be tempted to short the dumb thing again. Got to be a little more careful here, for the simple reason that as we're coming into 1040, we do have a trend reversal at 1040. Yeah, 1040, we're going to have a trend reversal on the Russell, and it's going to go up for a while after that. So anything shorting here, we want to be super careful for, because again, we're kind of running out of time. That's the nice thing about trading time. Time doesn't stop. No matter what we do, time is still calm. It's still moving. You know what? I'm halfway between signals. I'm not going to mess with it anymore. Aggravating thing. Should have gone. Oh well. So we're halfway in between my next two timing signals, 1035 and 1040. I'm going to start looking for buying opportunities on the Russell and see where we go from there. Over on crude, still looking for the buys, penetrating the sell dot now, And 1027, I'm intentionally just kind of sitting aside here on crude, waiting on the econ. I haven't had a clean setup in a while. So ES, I haven't had any setup in a while. So I had one early this morning. Had a little pattern 4 action down there, and that's about it. Haven't had a whole lot to do after that. Oh, we did have that one little counterintuitive short that only picked up a point or two off of it. Testing the open price line again on the Russell for the 15,000th time. All right, our report is out in 10 minutes. Yeah, there's the pattern 4. So no surprise to see the ES pushing right back up. Again, the 1 hour pattern 4, knew it was coming. And that move is not exhausted completely until 40.85. So that move still has some legs. 40.85 is the one. On the 1 hour. $10.40. Yeah, I'll see what 10.40 gives me. Everything's going to be in agreement to go up again. All the time frames on the S&P here will be in agreement starting at around 10.40. Yeah, maybe another coffee break there, Colin. Russell, after a nice push down for about 12 points, it is pulling back up. If we go anything above 1781.20, it's probably going to pop and run to the top of the zone. Crude report out in 8 minutes. All right, there's the pop of my yellow line. It's going to launch now, probably up into 1035. Now, the interesting thing on the Russell is this 1035 to 1040 signal. Guys, if we're putting in a brand new high at 1040, that's going to be a power zone, pattern 5. If that happens, there's a fairly good probability that this market will fall all the way to the bottom of the zone, and it might be waiting on that time to do it. So let's watch for a possible pattern 5 here at 1040. I mean, correlations here. 11 o'clock. If 11 o'clock, yeah, if we hit 1788 at 11 o'clock, that's close to 1040. It's within 3 bars or 4 bars. On the 5 minute, that would be a pattern 5. And that also indicates that from that time of day, good possibility we see a move back to the bottom of the range. Things that make you say, And 12 o'clock is our next signal up. The 1 hour, if it hits 1799, it's gonna tank because that's another pattern 5. So Russell looks like it's buying up potentially into a sell. That's what it looks like it's doing. ES is not quite as clean. Oh, down into 1027. 2 minutes and 20 seconds. I would really like to buy this market off this 1027, especially if we close below 104.99. If the bar we're on right now closes below 104.99, I would be highly inclined to buy it. However, it's the econ bar. So riskiest bar of the entire day is going to occur right when I want to buy it here at 1027. So you know what I'm going to do? Nothing. Nothing. Not going to risk it. We'll let the econ get out of the way, and then we'll pick it up and go from there. Man, I want to buy that. I want to buy this bar up. Ugh, so badly. So badly. Oh, that's going to be a nice move. Dang it. I'm going to sit on the side. But otherwise, this is in 12 seconds. I'd be looking to be a buyer for a minute. But again, we're on the econ bar, so that's very, very risky area in the market. I would be buying it right there. But again, this thing is likely to spike one way or the other like crazy for a minute. You never trade on the econ bar. It's always risky. I say never. I mean, you can, but it's very risky. All right, Russell's pushing up. The cleanest patterns today on the Russell. Yesterday it was the ES. Today it's the Russell. Potential pattern 5 between 1035 and 1040. Crude report in 2 minutes, 12 seconds. We're going to watch for crude to lose its junk. Let's see what the expectation is. The pumpkin heads in the market said projection is to be negative 1 million barrels. So they're expecting that we will be 1 million barrels less in the reserve. Take a quick peek here. Yeah, there's the one from 2 weeks ago. That was bizarre. I mean, you know, everybody gets it wrong once in a while, but you got to ask yourself the question. Your job is to read the gauge on the side of the tank. That's your job. And you get it that big, you get it that far off 2 weeks in a row. Learn to read, son. Learn to read. Big, big, big back and forth action. Something squirrely with that, I can tell you. All right, well, let's see what it comes back as. Crude report out in 59 seconds. If it were not the crude report again, I think I'd be buying it right here. Now, Drew, don't be talking about that man's skill level reading that gauge. You don't know. You don't know the stress that man's under to read that gauge. That gauge is tough to read for some people, Drew. Yeah, I'm not doing anything with it, Colin. I'm just watching. It's gonna lose its mind in 6 seconds. So And there's the crude report. All right. Well, let's see what the number came back as while we just wait on this market for a moment. All right. And the number was, survey says, gimme, gimme, gimme. Drew, can you read your gas gauge better than that? They were expecting negative 1 million barrels, and the number came back at 8.5 million barrels in reserve. Son, really? Wow. 8.5. I would hope that you could read your gauge better than that guy. Wow. That's all you can say to that. Just wow. Knee-jerk reaction. And all right, now we're going to come into a buying trend over on the crude in just a few seconds. Remember, we had the 15-minute. The 15-minute is actually inverted long now. So isn't that special? It was expected to be down for days yet. And with the most recent price action, the 15-minute has now gone to the long side. Pull this back and we'll go to here. Now our 15 has now inverted long. That's a back and forth piece of trash market right there. This thing is a back-to-back move. So until this is now projected to be up until Friday morning at 6:15 with that last heavy move of the market here. Closing 2 bars back above the top, brought it back into phase on the 15. Wow. 30-minute, not falling for it. 30-minute is still on a pattern 5, or it's pushing up toward a pattern 5. The 1 hour is a pattern 5 as well. So again, let's not get too overly crazy here. Over on our 3-minute chart, close of the next bar, we are going to come into, if we can get a selling bar at 1036, then we can look for a buying opportunity. Otherwise, it's a mixed bag of nuts at the moment. Yeah, you would think so, right, Colin? They have boatloads in reserve right now, so you would think that'd drive the price lower. Oh, you're so naive. I don't think the amount of crude sitting around actually has hardly anything to do with what the price does anymore. I really don't. I think he's punking heads drive it however they want it to be. I know it doesn't affect the price of gasoline. Crude has nothing to do anymore, I don't believe, with the price of gas. Used to be it did. There was years ago, crude had a lot to do with the price of petrol and, you know, what we paid at the pumps, and that was a big thing. Nowadays, I don't think it has any correlation. At least I can't personally find the correlation. How about that? There was a time where I thought I knew the correlation, but I don't think so anymore. All right, let's see if we're going to get this pattern 5. Hey, Colin, you don't see something interesting? Drew, you'll probably get a kick out of this too. I sent this to a friend of mine the other day. He was ranting and raving about something. I was like, do you realize, well, everybody's ranting and raving about the cost of gasoline right now. But I thought this was just an interesting little chart I sent him dealing with the crude. And he was saying, we were talking about how crude is not related to gas prices the same way anymore. And so I pulled up the chart because most people who don't watch charts or watch crude regularly don't realize the difference of the correlation. And I just thought that was an interesting little thing to look at. So if we look in 2008, a barrel of crude was $202 in 08, and gas was $4 a gallon national average here in the U.S. So that was high. $4 a gallon was average, and the price of crude was $202. 2012, I just grabbed this one for comparison. Price of gas was $3.65 average in the U.S., but the price of crude at the same time was $133. So we were $133 a barrel, and the price only changed 40 cents average. And then we get all the way down here into 2020. I move on down. I probably should put, yeah, I should. Let me see what 2016 was, because that'll give us an in between. Oh. $235. So over here in 2016, the price of gas in 2016 was and the price of crude in 2016 was $57. And then now we're all the way down here in 2020. The price of crude was $2.15, but the cost of a barrel of oil was $12. And again, I pulled up a monthly chart just so that we weren't like fine tuning it. But that's a pretty significant difference. And here we are at 405, which is the highest gas prices recorded ever in this year. And the price of crude is nowhere directly reflecting that. Highest price that we've seen is 128. So that's a pretty significant. Yeah, when I said I don't see any correlation anymore. When I was doing this for Blair the other day, I was like, dude, there's nothing that correlates these in my brain any longer, other than just, you know, the gas companies can get it and they're going to get it. So it used to be if crude was $20, then gas would be $1.50 or something. You know, it's all about, I don't know what it's about, Colin. I thought it was about changing everybody to electric, and maybe it is, but I don't know. I really don't know. All I know is there's no logical correlation to what I see in the actual numbers for the actual years. There's just not a logical correlation to any of them. So I don't have data going back any further than 08, or I'd do a study all the way back, but that's as far as I can go. All right. Oh, isn't that special? Well, I'm going to take a risky little short here. Now, why am I going to take this risky little short? Because looking over at my crude, I'm just putting in a pattern 5. Oh man, I might even miss it. I don't want to give it a ton of risk. My risk is going to have to be at 55, so about 48. That's about what I'm happy with. I'm also getting a pattern 5 here on the Russell. I'll give the Russell a little more because, well, I just will. Pattern 5 over on the Russell. Let's see if this bar will pull back down. Counter trend, counterintuitive move. This is about the only move that I will take based on just the power zone signal. It's got a minute 43 seconds to close out. Let's see if it's going to roll back over and power zone pattern 5. And let's see if this thing will pull back down. Once this bar closes, I will establish my risk at the top. I'm going to have about 2 points of risks here, so about $100. And we'll see what they go. So come on, roll back over here, market. Don't get crazy. Crude pattern 5. Russell pattern 5. Uh-oh, that's a bad sign for the Russell. It is now a pattern 5 also here over on the 11 o'clock signal. So we've got 16 minutes. And if we hit here, if the market hits that price right there, it's automatically a pattern 5 on the 1 hour chart as well. So between those three, major reversals are expected to occur, yeah, right about that price. See if it'll roll back down here in the next minute. Otherwise, I'm gonna be in a little bit of trouble. Yeah, no, I totally agree that, you know, all the other business factors that go in between truckers and inflation. Inflation, I think it's the biggest thing. And the price of a barrel of oil, like I say, it used to be it was fairly correlated to the price of gasoline. But, you know, refining costs, which probably actually go down over time, but because you don't have to pay for a refinery every year. But at the same time, like we have a refinery explosion. Well, that now you got to rebuild all your crap, so that costs money. So there's a lot of stuff, and yeah, for Colin, yeah, for you guys, your biggest thing is that you guys have that 20% VAT, that 20% value added tax that they decided that everybody in England and Europe needed. That was not pleasant. Pattern 5. Again, I'm looking to see, I'm not going to chase this trade on crude at all. If I do get a fill, I'm going to put my risk just barely above it, like 6 or 7 cents above. I have a 30-minute or a 1 hour pattern 5. This one's technically not going to close for 12 more minutes. It's acting like a pattern 5 here, retesting the bottom of the power zone on the 30. The 15 is also a P5, as of that last bar. So counter trend on some with the trend on others. And again, I'm not gonna chase it for sure, because I'm gonna try to get as little risk as possible. Ching. All right, that's all the risk I'm gonna give it. So I'm willing to give it 6 cents, 6 pennies. I'm willing to risk 6 pennies to make 30 to see if this thing's going to pull back down to the open price line. Actually, I'm risking 6 to make $1. So I'm willing to risk 6 pennies here to make $1. If it goes through there and takes out my 6 pennies, fine. If I get up over $150 in the trade, then I will lock in some profit. I'll take no loss on it. So risking 6 pennies for a pattern 5. It's a pattern 5 retest is what it is. All right, well, there's $160. There's $200. I don't think I'm going to take a loss on this counter trend trade, not being up $200. It's crazy counter trend. And I think somebody owes me $100 for my trouble. So I'm going to get $100 for my trouble over on the crude, looking for the move back down into here, see where it goes. I'm up $100 counter trend also over on the Russell. $100 is not much room to be able to lock in on the Russell. If I can get up 150, I can lock in. All right, there's 150. So on the Russell, yeah. All right, so on the Russell side of the world, I'm up $200 on the move. I think somebody should give me $100 for my trouble. So again, I got $100 locked in there, no matter what. Boom, 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 boom. Ow. That's my version of a humming electric guitar, in case you were wondering. Takes a lot of skill to do a humming electric guitar, by the way. Drew said, yeah, don't give up your day job. I hear you. I hear you, big guy. All right, I'm going to let the Russell sit at this point. If I get back into 79.30, I'm going to get some more profit off. So I'm not going to do anything else until I get back to 79.30. All right, well, crude, I only got $110 off of that counter trend, counterintuitive move, retesting the top of that power zone. So, yeah, I didn't get much off. It's a counter trend. So, I mean, when you're dealing with a severely counter trend move, you have to make sure that you have very low risk and you get out of that, you get that sucked as fast as you can. All right, we're going to have support on the Russell at this 79.30 level. We're within just a couple of ticks of it. I got 23 seconds to close this bar. If this bar will come on down and tap that level, I'm going to grab more profit off. 17 seconds to go to close the bar. Counter trend, counterintuitive. So, yeah, it may scream on down, but I'm not taking any risk on it. I'm not even risking open position profit. So, and we're done. Ching! All right, I got $250 locked in on this move. I'm not giving that up. Sorry, just not. There's the market retesting the open price line. Now, if it punches the OPL, this thing's got legs. If it punches through 76, 79, it's going to run down hard. If it doesn't, if it's going to sit and stall, which I expect it probably will, if it stalls here, again, we're going to go back up and re-hit the top. So as it is, well, maybe it's going to punch it. That'd be kind of cool. I'm not giving it up, though. I can tell you that. All right, locking in the open price line from the power zone signal. 79.60 from my short entry there at 86.40. I'm up $400 in the trade, and I just don't think I'm gonna give that up. ES did not have the same setup, so I haven't had a lot to set up on the ES today. Some days you get them. I mean, again, just all depends on the price action of the market. Whoa, wait a minute. Uh-oh. All right, locking in more profit over on the Russell, chasing it down. I'm giving it just a little bit of room. I expect if it starts to go hard, it'll go. Well, I got a little too aggressive. So I might have got a little close to the fire and I might have got burned a little bit right there. All right, the crude came back up. We've hit that. We got right to the top of that power zone again. Dadgummit, I got too aggressive with my Russell trade. Dang it. Shoot. That one has a little more room left in it. And I got too aggressive. Sorry, guys. Too aggressive there. Pattern fives are still in play on the crude. Let's see what happens here at 10:57. Yeah, we didn't lose anything on that one, Drew, but sometimes there's a little bit more profit you can gain. I mean, that thing's probably, once it penetrated that white line, it's going to go down all the way until 11 o'clock. And I was just pulling it kind of tight and I got a little too close to the fire. Blah, blah, blah. Yeah, Colin, the ES and the Russell, they're running pretty close together. They are very similar. Very similar. There you go, Colin. Good job. $120 off a micro. Nothing wrong with that. We have another pattern 5 retesting top of that power zone again on the crude. Minute 53 seconds. Come on, stay up here. I'm going to sell the crude again. We have another pattern 5. We just had a doji candle. The top of that power zone is definitely holding resistance for our market. Remember, it is a pattern 5. Also, that's an open price line retest on the 30. It's also a pattern 5 on the 60, and it's a pattern 5 on the 15. So all three of those are in full agreement. 4 minutes to close the bar out. If I can get a little entry here, again, low risk. I'm only willing to give it a few pennies above 67. So I'm only willing to give it 5 or 6 cents, not a lot. If this will give us a buying bar here in the next minute, we'll have a double RevPol rule. We'll meet RevPol rule 1 and 2 if we can get a buying candle at 10:57. It'll be a RevPol 1 and 2 and a pattern 5 at a retest at the top of the power zone. So the evidence, if you would, for the market getting a little move down is starting to stack up time-wise. So starting to stack it up here. All right, 16 seconds. Give me a buying candle here, son. There you go. We have a rev pole, 1 and 2, counter trend, counterintuitive move. Well, it gave me the fill, a little more risk than I'd like to see. See if we get a move down to here. All right, $160 up pretty quickly. Again, I'm very counter trend, so I think I'm only going to take $60 for the moment. I'm going to give it a minute here, see if it won't pick up some steam. So I locked in $60 very quickly, took no risk on the trade. I'm not going to risk much here on this counter trend move. And look at what the action's been lately. So if it's either probably going to move now or it's not. Okay, so it's going to go down right now or it's not going to go. That's my thought process. Extra, we're far enough now that I'm fairly comfortable taking $150. I got $150 locked in. If we breach 105.13, we should scream on down into the target. Sweet. That's all you can say about that one right there, boys and girls. Sweet. Up $430 on the move. I'm going to lock in 200. In fact, I'm going to get 280 because I'm greedy. Come on. Go, you pig. Go, you pig. It's too rough to be Jim. Come on. Man, I cannot catch a good, solid, hard run move all day today. It's just been like pulling teeth. You know what I mean? Like the trends are just, ugh. There's a lot of indecision in this market today. I can tell you that. All right, we've got a big selling candle. So usually if we get a big hammer candle selling down, that means the very next candle will be a pullback up into a small buy and then a continuation lower. And I'm up almost $500 in the move. So I don't think I need to take anything less than about that. I got 350 off. I was 500 down. Again, it's very counter to the trend. It's counter to the projection trend and it's counter to the actual price line. So now watch that dumb thing run straight on that profit target. Piss me off. 1, 2, 3. Ugh. We actually have almost a pattern. It's not a pattern 8. It's a pattern nothing. What it is. It is a rev pull though. It's a rev pull rule 2. We have a reverse polarity rule 2 over on the Russell. ES, I want something to be on the ES, but so far I haven't had a good clean setup. Crude is going, but man, it is fighting it. Look at there. It's going to go all the way down to my target. Trail stops were out for me, so I didn't lose anything on the trade. I made a few $100s on it, but there was definitely a little bit more open position profit there we could have picked up. Any questions from anybody in the gallery about all the weirdnesses we're doing today? Again, if you got any questions, never hesitate to pipe in. I'll answer most of them. 1, 2, 3. Oh. You have questions, you just don't know what to ask. Well, that does add a layer of complication if you have a question, but you don't know what to ask. Yeah. All right. Well, someday you'll know.
In my eyes, what makes you smile?
Well, we got our target, didn't we? Right there it was. Up 1150 on your sim account today, Drew. That's pretty good. Hard to complain with that, isn't it? 1, 2, 3. Man, that's so close.
In my eyes, make me cry. On the water, look so lovely. Almost always make me high. I can tell you, I can say, sure you make me smile. I wish I could wish for. I make a wish, the sunshine. On my shoulder makes me happy.
All right. Yeah, maybe so, Doug. This pattern 5 is kind of hard to remember. With the pattern 5, I only grabbed a few $100s off, but there's a really strong probability because the market entered here at a pay 5 on the power zone. So when we have a power zone pattern 5, oftentimes that will go all the way to the bottom of the range. It'll go all the way to the bottom of the zone. That's fairly common. Now, it might take it 2 hours. So, I mean, it could take it a while. And that would be the exact same thing we see in our book. So if we look at our counter at our pattern 5 rules, does this look familiar, Doug? Not really much difference of this in that, that's in the book. So that's almost a buy the book trade. And again, when we see that, go down here to the where is it? I know there's a picture of one of these things in here somewhere. There it is. So again, notice the sequence. If we look at our sequence, this is not something new kind of thing. It's so in the book, Jesus freaking horn. That's the guy with the loud horn. Oh, so there's the pattern 5, and again, that would be the expected move. Would be to the other side of the zone. Now, sometimes it'll do it in 4 or 5 bars. Sometimes it'll take it 4 hours. But oftentimes, that's where it'll go to. Where's the link to that manual? Well, let's I have it right here. Now that you mention it. Let me grab it for you and I'll drop it in here. Okay, click on that little link right there, big guy. You should see it in your question and answer box. Anybody that would like a link to the book that I was just showing, that's the pattern 4 or 5 reference manual. All right. So over on the crude, I haven't done anything in the last few minutes, just giving the market a little time to wash out after the 11 o'clock signal. We pulled down and we're now getting a buy signal. It's a rev pole buy. We're in a down projected power zone. So with the down projected power zone, I'm actually thinking I'm going to sell this thing, and I'm only going to give it risk just above the dot, just above the bar that closed the dot right there. So I may be a little bit late. I turned my head. I was answering a message. Crap. So I'll turn my head for a minute answering a message there. I might miss this move for that. Yes. I'll leave it sit there for a minute. So we have a reverse polarity signal, down, back up into the sell buy. And now let's see if we're generally going to be looking for shorts here for the remainder of the morning. Over on the crude, especially over on the ES, we entered at a pattern 5. So again, it's not really a huge surprise to go the full distance, and it's not a good clean anything. The first buying opportunity of any kind on the ES that's relatively clean is going to be in 5 minutes. I'm going to miss that crude move, sure as a freaking world. Russell's going to go all the way to the bottom of the zone, so just generally going to be favoring shorts until 11:30 at least. All right, we're back into retesting the open price line of the current power zone. It's going to be one of the more significant resistance levels on this chart, 104.55. Support and or resistance. We should be closing bars below 104.55. Yeah, I flat missed that little move, didn't I? It's what happens when you know it's there and you look away for a minute. You get distracted, and it's like you look away what feels like 2 seconds and you turn back your head and it's been like 4 minutes. Like, wait, where did my last 4 minutes go? So that's what just happened to me. Yeah, I'm a long way off the mark. It's going to keep going down, so bummer. All right, let's wait till we got something that's solid. That was a decent little entry. Opportunity was there. We would have already been out of the trade, already moved from 86 down to 56. It already moved $300. I'm not going to chase it now that it's already moved $300. I would have got 150 off anyway. So I guess 1127. It's going to keep going, but we'll see where 1127 holds. Everything looking for short here for a while. Missed trade because I turned my head. Bummer. Oh, we'll call that one operator error, won't we? Well, we got 7 minutes left in our morning. ES going to close this bar out. It's first buying opportunity since we've been in the buy zone. I don't really have much here. We're going to have a rev poll on, well, we don't know. The bar's not closed. You know what, guys? I got 6 minutes left. I don't really think I'm going to risk anything in 6 more minutes. I just don't think that's something I need to do. So we'll watch it out here for the next minute. Let's take a quick look, see where we're at for the day. Today is the 11th, 5/11. Where is this month gone? All right. So today we've had 10 trades. So we've had 10 executions today. We've won 9 out of those 10 trades. So we took that 8-tick slip, terrible little loss early this morning. Made it back up, but in a butt market. We've had a nice profit factor. We paid $42 in commissions. Oof. $42.56. Net profit for the day is $1,719.94. Not a terrible day. Volatility has been decent so far for this week. We're at $3,275.80. We've had 21 positions on. 85% of those have been making money. And we have a profit factor of a 2.87. So I missed most of the 1st of May. I was on vacation that week seeing my daughter. I did get in Thursday with you guys. So we add Thursday to our mix, $3,697. Had 26 trades so far for this month. 80.7% of those have made money. Profit factor has been a 2.6 average over the last 26 positions. So we're not doing too bad. Making some cash, hanging around, talking to you guys, drinking coffee. Not been a bad run. Gonna add that to our yearly totals. We are now at $47,006. Fairly steady equity curve. So had a outlier trade in there. It's abnormal. but or outlier day rather. You're always going to have an outlier abnormally large day and an abnormally small day. We do get an occasional drawdown. It's going to happen once in a while, and that's not too bad. We look back over the last, let's go all the way back to last January. You know what, actually, let's do May to May. If we do May 1st to May, whatever we're at. Yeah, we had the one outlier week there, but outside of that, pretty steady little equity growth. Not been a bad run. $90,000 fiscal year, May to May. On that one contract, occasionally two, sometimes a little more. 107,000 since last January. So I think we're still doing okay. Doesn't seem like we're hurting any. Yeah, there's that one outlier week, it really shows up. But outside of that, pretty consistent. That's the name of the game. Keeping it consistent, not getting overly excited. All right, well, got 2 minutes left in the day. Again, we're going to close out our day today with 1719.94. Thank you, everyone, for hanging around. I'm going to bail. Have a great afternoon. I'll look forward to seeing everybody tomorrow. We'll do it again. Same channel, same time. Thanks, everybody, and have a great day.